Good morning, everybody. I'm Ed Parcaut, usually here with Mike Kelly, but he's still on vacation. Should be back on Friday, but who knows? They might extend. You just never know. So, as like I always say when he's not here, it's just a fact. So let's get right into it, shall we? Because it'd be weird if I'm talking to myself and going back and forth. You'd have to turn me in. All right. So there's a lot of data out there. Really not a ton, but a little bit. Dow's doing well this morning. S&P. The actual bonds are, or I should say, the market for rates are not doing as good as they could be. Right now, the mortgage-backed securities are actually up. I'm sorry, they're down 7 basis points for rates. So rates got a little bit worse, nothing major, and the 10-year sitting at 4.37, 3 basis points up. What does that mean? Nothing right now. It really doesn't mean anything because until the tariffs and all this stuff gets resolved, people are going to be unsure. And I think they're just waiting. Some are buying, but the majority of people are indecisive and they don't know what to do. And so they're just waiting. And I think the data is actually showing that we see. So let's get right into it, shall we? Yes, we shall. All right, here we go. Existing, what do we have today? Existing home sales. And that is homes that were already built and sold before and now back on the market. Existing home sales for June dropped 2.7% to an annualized pace of 3.93 million units, way below the expectation of 4.01 million. Inventory is up 15.9% year over year. It sounds like a lot, but we're still not at our normal pace before 2019. Median price is 435,300. That's up 2% year over year. So house prices are still going up. And this is nationwide. So that means locally in California, we're still going up even more than that. Why don't you times that by 3 or 4? And that's probably where we're at. So if you're looking to buy a house right now and you're worried that the value is going to drop, I don't know if you should worry about that, but talk to me personally. So with this, what is that telling us? Despite the increase in supply and prices holding steady, buyers are still hesitant. Oh, look, it's what I said. Likely due to affordability and rate pressures. It is because you have people who want to buy a bigger house. I did this with somebody just yesterday, and the new mortgage on this $600,000 house and everything they're doing, you're talking, some big chunk, like $4,200 with taxes, insurance, and everything else, depending on where that insurance is, because that insurance could be $250 to $300 just there. Not talking about mortgage insurance and everything else. So really run the numbers and have a plan is all I got to say. I'm not saying not to do those changes, but just you got to have a plan that you might be stuck with that rate for many years until we start seeing the stuff go down. I still think it's going to go down this year, but who am I? I'm just Ed Parcaut. All right, so don't let the 2% gain fool you. It's a reflection of tight supply at the top end of the market, not broad strength overall. But still, Central Valley still doing well. All right, let's look at the other thing that came out today, which is mortgage applications. So the Mortgage Bankers Association released their mortgage data for last week, always a week behind. Overall volume is up 8%. Let's see what this is. So that overall application volume is up 0.8%. Purchase applications are up 3% and still up 22% year over year. So that is not a lot. Refinances are down 3.3%, but are still up 22% year over year. That sounds like a lot, but it's really not a lot. When you don't have much, it sounds like a lot. They said the average fixed rate rose to 6.84%. Remember, a lot of those rates include points. I'm not quoting rates. I'm just telling you what Fannie and Freddie are saying. And the Mortgage Banker Association. Average purchase loan size dropped to 426,700. That's the lowest since January. That just means people are buying smaller homes because it's tight. It's when you look at an interest rate in the 6s to 7s, that payment's kind of big, and you just have to be okay with that. This is one of the most confusing years for mortgage data, according to many analysts out there. They're seeing 25 consecutive weeks of year-over-year growth in purchase apps. It's still a strong stat, but heavily influenced by how weak 2024 was. So remember that 2024 was much weaker than we are in 2025. It doesn't seem like that. It seems like it was bad too, right? New listings are the real story. Sellers are also buyers. And as many homes hit the market, purchase applications are being filled. So remember, when someone's selling a house, they're also buying a house. So those numbers are, I want to say, it's kind of skewed a little bit. Purchase applications are ahead of last year's pace, but high rates continue to limit refinancing, which we already talked about this. That's, I'm not going to refinance my house that's 2.75 to pay things off if I have to take a 7% or 6.5 right now. What else is going on? The other turnovers, people are looking at, a lot of people have to sell their house to buy their next one. They can't just buy it outright. They don't want to take that risk. And I can see that. I can see that thought also. We have some more stuff tomorrow, initial jobless claims, something else. I'll keep it a secret because I don't have it on here. Just kidding. I just don't have it right here. Let's see, what is it? Existing. So we talked about existing home sales. We talked about mortgage applications, and that that's about it for today. But I wanted to get to where are the what else we got going on this week tomorrow. I know it's Friday's nothing major. Yeah, Friday durable good orders. So tomorrow's initial jobless claims, new home sales, and durable good orders. I guarantee you, new home sales are going to be down because that's what the builders thing that came out said they were down. So they're going to be down. So what does that mean to you? That means it's an opportunity. I know we say this, it is. It's an opportunity still for you to get that house you want. It's going to be tight and you're going to have to understand that. But again, when rates finally do go down someday in this future, in the crystal ball we don't have, it's going to be very competitive because there's a pent-up demand for homes. There really is out there. People want to purchase, people want to move up. They expanded in their house. They got too many kids now. They have to move up and they just are trying to do it smart. And I understand that. So that's really all of the data today. And again, thanks for watching. We really appreciate you, reaching out and telling us how much you like this. We really appreciate that. If you have any questions, if you have any comments, feel free to reach out at any time. You can just direct message me or Mike, and we'll be back. I'll be back tomorrow. Last day without Mike. He'll be back on Friday. I know it's people are wondering how come when I'm gone, he doesn't do this. So I don't know. Why don't you ask him? Anyway, make it a great day, and I'll talk to you tomorrow.